Welcome back. I'm Benjit Dhesi, nearly 2 decades in capital markets, and I still find this stuff fascinating. I promise. Here's what matters this week. So, I'm going to start with a question. If the calendar's packed and markets are moving, why does it feel like nobody can quite agree on what's actually happening? So, I'll tell you why. There's two numbers. Gold is up 4% on the week, and Brent is up 5%. And when those two move together, it's not just about inflation, it's doubt. The market is hedging something, but it can't quite name it yet. And this week, we might find out what that actually is. So, three themes. Let's go. First up, energy. And the timing couldn't be more awkward. 5% on Brent in 5 days. That's not noise, that's a message. Central banks spent 18 months telling us inflation was cooling. Well, energy just sent a reply, and it wasn't polite. The CFO who signed off the floating rate facility 6 months ago is looking at this and wondering if the rate cut they were banking on is actually coming, or at least as fast as they thought. Second is gold and rates. And right now, they're having an argument, and one of them is definitely wrong. If we look at 10-year dollar rates, swap rates, they're just under 4%. They look orderly, calm, and it looks like they completely believe the Fed. However, gold is at all-time highs, and it doesn't believe the Fed. So here's the thing, only one of them can be right. Real rates, dollar direction, geopolitical noise that won't go away, something has to give in there. So in my experience, when gold and rates diverge like this, the resolution is rarely quiet. So watch the tension. This is going to really matter. Third is Europe. And most people are completely missing this. Euro stocks are up nearly 3%. The S&P is less than 2%. Now I know, look, Europe's been the trade that has never worked. Well, never quite worked, I would say. But this rotation feels a bit different. It's not just flows, it's conviction. Valuation discipline is back, and money is moving with a lot more purpose. Also, AI is still the dominant story, but it's stopped doing most of the heavy lifting. It's picking winners and leaving losers behind. And that's a more interesting market than one we had 6 months ago. So moving on to rates and funding. Sterling swaps, 3.65% in 2-year, 4.2% in 10. Euro is at 2.2% and 2.75% respectively. Look, these curves are not exciting and is almost the point, right? So this is a market that's grinding and it's not breaking. It's not running. It's just grinding. So it's kind of more of the same, right? The real question in the UK is March or April for the Bank of England. And I'll be honest with you, the data alone won't settle it. Bailey is a swing vote, but we know that he oscillates between hawks and doves, and he's done that all year round. So whatever he says on Tuesday at the Treasury Select Committee, that is the #1 market event of the week. So for anyone in fixed floating conversations right now, fixed still makes sense in sterling if cuts come later than March. And also don't sleep on gilt supply. The DMO remit and the issuance skew are doing more work right now than the rate decision itself. Okay, moving on to FX. The dollar is softer across the board. If I look at euro dollar, that is 118 at the moment. Cable is 135. Dollar yen is 154.8. So two channels I'd actually watch. Sterling, it's a bit binary and it's completely hostage to Tuesday's testimony. One dovish line from Bailey, and that could really move the market. Secondly is yen. The Bank of Japan wants to hike, but only if the yen cooperates. And the yen cooperates only if the Bank of Japan hikes. So it is definitely circular, and markets know it. So, which is why positioning around yen has stayed so interesting. Also, one EM name, India. The US trade deal has shifted the narrative on the rupee. The Reserve Bank of India is less likely to fight appreciation if they get the flows returning. So what I would say there is if you've got Asia FX exposure, it's definitely worth a look. Commodities and inflation, here's the simple version. Energy moves, CPI flows, central banks react, everything else reprices. So we're not at the point where the trend has broken, but I've watched this long enough to know a few more weeks of Brent at these levels, and that's very important, at these levels, and the narrative shifts, whether the data confirms it or not. So markets price the story before the numbers, and they always have done. So quick roundup of other markets. FTSE hit a record high last week, quietly, without much of a fanfare. European equities broadly holding, so the rotation is definitely real, I would say. Moving on to crypto, Bitcoin is down nearly 2% on the week. Ethereum down nearly 3%. Now look, after the run we've seen, I would say this is more consolidation than anything else. But here's what I find interesting about crypto right now. When risk assets pause, crypto doesn't just pause. It actually amplifies. And it's because the way I see it, it's one of the cleanest real-time reads on where institutional risk appetite actually is. So watch whether it holds or leads the next leg lower. It will definitely tell you something that the rates market won't. Right, the calendar. Unlike last week, this one definitely has teeth. Firstly, looking at Tuesday, Bailey, Green, Pill, Taylor, all four in front of the Treasury Select Committee. This is the Bank of England's most important communication moment, I would say, outside of a decision meeting. Green and Pill, as we know, are hawkish. Taylor leans dovish. Bailey, let's just say flip-flopper. March or April, the decision, I would say, really gets decided at this meeting this week. Moving on to Wednesday, Trump's State of the Union. Not a market event in the traditional sense, but look, hey, it is Trump. So he can definitely move things, especially the words that he uses. So look at tariffs, spending, Fed commentary, any of it really, can land in markets, and it will land in markets in minutes from when they come apparent. Also Wednesday, German IFO, 3 consecutive months of falling expectations. If this stabilizes, the European growth story could have legs. If it doesn't, that Euro stocks rally could be quite fragile, I would say. Thursday, we have in the UK the Gorton and Denton by-election, and that is a genuine three-way contest between Labour, Greens and Reform. So a strong Reform vote keeps the political risk premium alive for sterling. It won't crater the pound, but it's a signal, and at the moment, signals definitely matter, especially when positioning is looking quite stretched. On Friday, there's German CPI flash, the first read on February's Eurozone inflation, and then straight into the ECB conversation, so definitely worth watching. Also, one more to add, which is not in the calendar, but absolutely in the market, Kevin Warsh, the next Fed chair from late May. The Senate confirmation is pending, but it looks like it's definitely happening, right? Markets took it as a relatively conventional choice. Yields fell slightly. The dollar also bounced, that we saw. But here's the longer game. Warsh has serious reservations about QE and the size of the Fed's balance sheet. $6 trillion of assets if he moves to unwind faster than expected. And that's a rate story, a dollar story, a global liquidity story, all in one. So it is a slow burner, but potentially the biggest macro story of the year. And that's your week ahead. Bookmark it, come back on Friday, see how it aged. Also, please do subscribe if you want the next one, and drop the one level you're watching down below.